Lost track of how many coffees I've had. Good morning, everyone, or good afternoon or evening, depending on where you are, and welcome to a new episode in CoinDesk's Institutional Crypto Webinar Series. In the past few, which you can listen to on our web, we've gone into some detail on crypto market infrastructure. In this one, we're going to go even deeper because, as you already know, and especially for nerds like me, it's complex and increasingly interesting. In fact, the more you find out, the more interesting it gets. And so to talk about that today, I'm joined by Mark Bargava of Tagomi, a prime broker in the crypto space, itself a relatively new concept. Welcome, Mark.
Yeah, thank you for having me.
And those of you who've joined us before, you know how it works. Mark and I will talk for a while, and then I'll hand over to him towards the end. He will choose from the list of questions that you have sent in. Many thanks for that. This session will be recorded and uploaded to our web as soon as possible. And with that, Mark, can you please tell us what Tagomi's role in the sector is?
Yeah, absolutely. So Tagomi is looking to be the agent for family offices, venture funds, crypto funds, really more institutional players that have been entering the market to be the electronic agency brokerage for them. So there are two parts to that I think are pretty different and new. One is the electronic. So, our team primarily comes from Citadel and Two Sigma and places that have built a lot of the trading automated infrastructure. And so the electronic piece is making sure that people can interact with markets electronically. And then the second piece is on an agency basis. So we never hold the Bitcoin and sell it to you. On the agency piece, we route to wherever pricing is best. But the agency piece doesn't just go there, it really extends. So we help pick the best exchanges and market makers to work with, the best custodians, the best banks to have settlement. So putting together all three of those pieces and automating it and allowing you to interact with all these counterparties in a way that's 100% aligned is something we really felt was missing from the space.
When you say electronic, the electronic, how is that new in the crypto sector?
Yeah, so when starting out with Tagomi, the reason we did it was because I was on the investing side, had been investing in early stage protocols, so seed investor in Blockstack and Algorand and other companies. My co-founder Jennifer was at Union Square Ventures, co-investing with me in many of the deals, and so we got approached by folks who were asking for a solution that was electronic, that was similar to if they were a family office, an interactive broker, or if they were a big fund, a Goldman agency desk. And that solution didn't really exist. And so, one of the things we're doing is moving the industry from phone or from Skype or from Telegram to being able to go on a platform and, enter complex trades, different types of algos, different types of trades, and submit all of that electronically to multiple liquidity sources at the same time, and to have that piece that just automatically smart routes based on cost and based on fee. And so kind of, automating and using electronic methods of placing larger trades is something that we see the vast majority of equities, FX, credit, all those industries have shifted to that model. We haven't seen it yet in crypto, and so tools like Tagomi have been missing. But I think the reason for that is the market was very retail until pretty recently, and it's still a vast majority retail. So in 2017, we really saw for the first time certain venture funds, certain family offices, certain crypto funds were being formed at scale. And so that was the first time you kind of had this ask for this sort of a product in late 2017. And so that's exactly when we started Tagomi, seeing the need for that, and just got incredibly lucky having Greg Tusar as a co-founder who in the 90s had seen the exact same need in the equities market. So it was very deja vu for him. He created actually one of the first platforms that allowed you to place multiple stock orders at the same time. And so went through that cycle, obviously led Goldman for 13 years, their electronic trading desk, saw a lot of iterations and advancement there, and then helped lead KCG, a large market maker, until it was sold. And so it's nothing crazy new or novel in terms of the need to want to interact with markets electronically, interact with multiple liquidity sources, be able to settle, be able to have custody within a same platform, but it's just really an execution game.
And do you think it's more about familiarity for the institutions that are coming into the sector, or are they actually looking for efficiency?
It's a bit of both. Familiarity, is one way to put it, but another way is having a partner that can do a lot of the different stuff. So, one thing we like to do, we have RIAs trading on our platform who have never bought cryptocurrency before trading with us. And a fun thing we do is we will actually show them the statements from all the accounts Tagomi has across, different exchanges, different liquidity partners, different banks we use for settlement, different custodians we have. And I think it comes out to being about 15 different accounts between those players, or 16. So it's also, why should every entity that wants to participate in this market have to open up multiple exchange accounts, figure out other liquidity providers, open up bank accounts to do escrow and settlement, open up custody accounts to be able to store it? How, that process isn't what folks want. What they want is either access to the space or, to spend time really deciding what's a good investment. And at Tagomi, we have a team of people who are experts in each kind of respective area. So on the ops side, we have folks who help set up crypto operations for some of the largest market makers and hedge funds. On the trading side and development side, we have people who've built these systems before at Goldman or Two Sigma or Citadel. And, on the custody side, we have people assessing different custodians. It really takes a full team and a full infrastructure to put together all those pieces. And so I think it's familiarity, but it's also just a lot of convenience, to be honest.
And how much of the crypto trading out there at the moment, especially if that from the institutional side, is now done by telephone, Skype, the traditional way?
Yeah, I think it's still the vast majority. So it'd be good to define institutional because, being in the space for a while, I heard 2016 was the year for institutional crypto. Then I heard 2017, recently 2018 a little bit, and now, of course, I'm sure at this conference in 2019, we'll have plenty of people claiming that as well. So what does institutional sort of mean? Why did I jump from the investing side to believing in the case of this institutional? So I think where the institutional market is today has a few different forms. I think primarily it is the crypto funds themselves. And so institutional capital, like the traditional asset managers and large banks, are not actively in this space. The large endowments and pension funds are not actively in this space. So what's institutional? Where's the exposure? It's primarily coming through crypto funds. And so a couple examples, one of our large investors and clients is Paradigm. It was a crypto fund founded by Fred Ursum, co-founder of Coinbase, and Matt Wong, who ran crypto investing and blockchain investing at Sequoia. And so if you look at, Paradigm, it's been publicly disclosed that folks like Yale's endowment are participating in it. If you look at another example of a client and investor of ours, Morgan Creek, they have 2 pension funds behind them. And so the list kind of goes on, but the really top sort of crypto funds are the way that most people are getting this quote-unquote institutional access. And so for us, we're working very closely with funds like that, with folks like Pantera and Multicoin and others who have sort of the more institutional LP base and servicing them. So that's how we're making sure that at the end of the day, large endowments or pension funds, all of which are nonprofits, that want access to this space, that want to participate in a really exciting market, have best execution, have lower fees, have transparency, have post-trade reporting. And so we're creating these standards and pushing them out there. But in terms of how that's helping the end institutions, I would say today it's generally through crypto funds. You have some exceptions, some great first movers. The Bailey family behind Cambridge Associates is an investor of ours as well, and it's pretty awesome, what Cambridge Associates is doing in the space in terms of advising clients and pushing for best execution. And so you don't necessarily see those really large kind of wealth managers actively in it, but many times you see the family offices behind them in it and using Tagomi, which is obviously awesome. So I think we're kind of at a first mover sort of initial influencer, and it's primarily taking, the view of crypto funds and family offices, not really yet direct exposure by endowments or pension funds or huge wealth managers or private wealth groups. But, that's obviously a group that comes next.
Are you seeing amongst the traditional institutions any of the traditional funds setting up their own crypto funds?
What's an example of that? What would be an institution? Like BlackRock setting up a fund or? Yeah, I think there's a lot of interest in the space. So I think the different players are very educated, but there are a few things that I think very rightly need to still be sorted out before you see the sort of direct exposure, which would lead to the kind of volumes on exchange, tighter spreads, all the things we can chat through. But I think there are a few kind of check the boxes that just have to come first, because I think the funny part is when you go into these large wealth managers or chat with them, it's always kind of a split group. Like you always have the crypto advocate, the person talking about store of value, talking about how smart contracts are, a real tech breakthrough. But then you also have other folks on the other side of the table wondering about legal and regulatory, banking, counterparty risk, and it seems to be many times just a stalemate in a lot of organizations.
But it's not just about the story, it's also about the obligations that they have to fulfill.
Exactly. And so some specific ones that, come up quite frequently that I think all of which are being worked on are, to kind of list two or three. So one is custody. Where can I custody this? We use BNY Mellon. Can I custody this on BNY Mellon? Well, no, you can't right now, but, you might have seen announcements like Bakkt and BNY Mellon are actually working on things, or other folks.
But we don't really know what they're working on exactly, though.
A lot of it's not live. There's nowhere you can really go and sign up for a custodian that, has trillions of dollars right now that's very easily accessible, that could hold multiple tokens or multiple coins. So custody is definitely one, but we see a lot of great players working on that. And so there's been great announcements and progress. And it sounds like almost all of the major custodians, from Fidelity to BNY Mellon to others, have projects in the space. There's also great startups in the space that are innovating on new technology, because obviously custodying a digital asset is very, very different than custodying an equity. Super different, obviously, that being a bare asset. So you have startups going at it with great technology. You have huge name brands going at it, committing to, having products more widely adopted. We'll sort of see what list of assets they can carry. And so custody is something that I think both on the startup and large sort of company side, there's just a huge amount of people kind of working on it and resources, and folks are just getting a lot more comfortable. So, we looked at 20 custodians. We ended up choosing 3 to integrate. Our team, our head of security from Two Sigma and our COO from Citadel, both really rigorously looked at all the different providers. We got pretty comfortable with a good set of custodians, and so are able to embed that within our product. And so that's one thing, though, that 2 years ago was just very different. You didn't have any of the announcements around large players. The startups were kind of just kept coming to fruition. So both the technology and the branding is so much more strong now. So custody's one a lot. But a second one is just clearing and settlement. And that's a big missing piece. So right now in the industry, the exchanges are doing pretty much their own clearing and settlement, which is just so different than equities or other worlds where you have the DTCC or you have ways to clear options. And so I think building out that clearing and settlement infrastructure is important too. You have some great banks who have entered the space, some beginning banks and some larger ones to really facilitate that, but getting clearing and settlement done by a separate entity than an exchange, I think would make institutional investors much more comfortable. And then probably the third thing is post-trade settlement as well. So, right now in crypto, generally you have to pre-fund, and many times it's the exchange as the counterparty handling all of that. And so it's just kind of these nuances around not just custody, but settlement and clearing, as well as post-trade settlement and financing, and thinking about who your counterparties are. That is all gets a little bit overwhelming to some compliance departments out there that are very, very used to what equities look like.
I can imagine that probably also largely explains why the trickle rather than the flood. And the work that you've had to put into this so far probably also explains the rate of the flow of funds into crypto funds rather than big funds actually putting money into it themselves as part of their asset mix, because it is such a different asset and different process. Have you seen that sort of thing?
Absolutely. Everybody understands GP-LP investing. You have two different LLCs. The LP invests in a GP. We've done this before. So that's much, much easier to get through compliance rather than, hey, we are going to connect to these exchanges, these other liquidity sources. We're going to use these banks for settlement. Then we're going to custody it over with these custodians. And there's just a list of players that a chief compliance officer has honestly never heard of. That's much, much more scary than, this group of young individuals has been in this exciting space for a while. They're going to invest. we're doing a GP-LP agreement. Could we invest in this fund? There are some background checks on a few principles. And so, it comes down to people willing to pay the fees for that. And then many of the funds obviously deliver a ton of value just because you do kind of have to be a specialist here to understand the industry. And so, I think that going forward, our view is there'll be a really nice mix of, funds that are creating alpha that you're putting X allocation into, but we also think that there'll be Y amount of direct investing where there'll be certain, Bitcoin as a store of value, smart contracts that are scaling, other assets that, for allocation Y, let's go in directly. And so we think that the institutional sort of allocations will end up replicating what they do in other spaces. But right now, it's pretty much, at least how we're seeing it, almost very, very little direct and much more through the funds.
Especially while we're getting used to the whole risk concept. Isolating risk is a big part of the traditional multi-asset funds job, and
right.
Putting crypto into a separate fund, either doing it through a third party or even setting up your own crypto fund, is a much safer way.
Yep.
Not to mention more practical, because as you say, it's actually quite complicated. Now, Matt, you talk to a lot of traditional investors, as you mentioned before. How would you explain to a traditional investor that came to you out of the blue how this market is different?
Yeah. Kind of the reason they should be excited about it in the first place?
Well, let's start with that, and then the but part of the conversation, which I imagine you're also very familiar with. But it is tricky for these reasons.
Yeah, sure. So I think it's exciting for 3 or 4 categories. So one category, which in itself is a massive idea, is just having a store of value that's digital. And so, the idea there is almost just an innovation on gold. Obviously this is something that Founders Fund and Peter Thiel, our investors, have advocated for a long time, is just, there's a better way to do gold that's a limited supply that you can transfer digitally, that has these governance mechanics around it. It's just a much stronger innovation, and to have a store of value that's independent from monetary policy of any country, that's really set by, the internet and that capability, is a really powerful idea and has huge network effect as more people buy into that idea, and which is constantly always, people think it's, network effects are really underestimated. And so this idea of a store of value and the network effects around it, I think, is in itself a massive idea that, all institutions should be paying attention to and be thinking about getting exposure there. But then there's also other use cases like smart contract systems. So that's essentially the idea of, how can we minimize or even eliminate the middleman in terms of financial and, legal. And in the U.S., there might actually be less value add to that than in other places of the world. Especially in places like Asia, like in India or China, being able to use smart contract systems. And so there we're really looking for scalability. And so there are a lot of different projects. There's Ethereum, but there's also Definity and Algorand and Blockstack and others who are all working on that. And I think when it happens, it'll be very much an overnight sort of phenomena. Like, the cell phone looked really dumb for a long, long time, and then suddenly, everyone was doing banking in China and payments in China on their mobile phone really suddenly.
Well, internet as well. I mean, nobody knew what that was going to be used for.
And the internet as well. And so I think paying attention to the smart contract systems, the scalability there, and the reason the tokens are interesting is as the governance mechanism on top or the utility needed, you can't ignore it, and it's something that could trade in mass and that could be very valuable. And then, a little bit less proven, of course, but is, what kind of app layer will come on top of these smart contracts, on top of the infrastructure? Will we have gaming and prediction markets and, really massive participation once you kind of have that scalability? And of course, you'll need the right people on the app layer to develop, billion usage apps. And then another one that's probably also a bit further away and less of a technology breakthrough is just the idea of, will you be able to put, real assets on the blockchain or into token form? People give the examples of real estate or startup equity, et cetera. There, I think, there's certainly interest to the idea of trading 24/7. A lot of times people can't access stocks in places like China or Asia, can't access U.S. markets. And so there, it's also, though, a huge legal regulatory question and a question of, is it the technology that's really enabling it, or is it more the technology is, being used by advocates to lobby for it. But all of these different cases at Tagomi, we're here to kind of be your agent. So as they play out, as you get more interested in Bitcoin as a store of value, or if maybe Bitcoin ends up being a payment system, or there's a separate token that's a payment system, as smart contracts are really much more scalable and there are tokens attached to it, if utility tokens and apps come through, if real assets are put, we're agnostic to that. We're basically helping you buy and sell at the best price with the best execution in a compliant way, and are asset agnostic. But of course, we see a lot of interesting things in the space. Most of the top venture funds have now placed bets in the space, and so it's certainly the next wave. And I think folks should pay attention to that because it's always a much better risk-reward a little bit earlier where you're starting to see adoption, but you haven't necessarily priced that in yet. And I think a lot of assets are kind of hitting that, really, when you look at the millions of folks who own them or where they're being used. And so it's a good time to start thinking about it. And I think everyone is. And they're placing bets in especially crypto funds or maybe in indexes, some directly. But I think it's time for a lot more people to pay attention.
When it comes to tokenized securities, do you see a day where crypto exchanges trade tokenized securities side by side, even though the custody is somewhat different?
Yeah, I think that's definitely, most exchanges or many of them have publicly stated that that's of interest to them. So I think they will enact it. It's kind of interesting because, Binance has millions of accounts, or Huobi or OKEX, and it's much easier to get an account on any of those three exchanges than to be able to sign up for, brokerages that help you buy stock in Asia. And so,
why is it easier? I'm curious.
It's just generally easier for individuals we've talked to, or even like family offices in Asia, to set up accounts on crypto exchanges than it is to get access to U.S. stock markets in some cases. So,
because they're not in the U.S. Yeah.
Exactly, they're not in the U.S. So I think that it's pretty interesting to think about maybe U.S. stocks or multinational corporations having tokens because the distribution might be easier for that. But I'm also not so sure that that's necessarily like a real tech breakthrough and more just kind of legal and regulatory. So we'll kind of see how that space plays out. I think for us, we're definitely paying a lot more attention right now to store of value payments, smart contract system, but excited and interested and waiting for more proliferation of security tokens because, of course, that would also be something we would engage with and help clients navigate across the different exchanges.
To unleash the mythical liquidity that everyone talks about.
Right.
One thing you alluded to before was the ease of settlement, the relative ease of settlement of crypto assets compared to others. Do you think that's something institutions actually want?
Yeah, I think that's a great question. I think it'll remain to be seen because it really varies by institution. Like, a lot of folks would like post-trade settlement. They're used to that. And instant isn't great. If you start thinking about using leverage, if you think about shorting and margin and all these different features, it's much easier to do if there's a series of events versus, if it all has to happen at the same time. So here at Tagomi, we definitely work through those nuances as well.
Now, Tagomi is often referred to as the prime broker for crypto. How is prime broker in crypto, that term, how is it used differently here than in the traditional security sector?
Yeah, so the entire structure is just very different. So you don't see a DTCC, and so, the exchanges are just doing a lot more in crypto. And so, our thought process there is there will be a similar sort of ecosystem for the on-ramp portion as you see in equities and other asset classes. So it's an important distinction because a lot of times, many of us went from investing in really cool new decentralized projects to are we just creating a big centralized project? And so the nuance there is you have two parts of the ecosystem. You have the on-ramp, which is, folks who have USD or other assets, more traditional players, on-ramping into the industry and getting tokens, especially Bitcoin and Ethereum. And then once you're in the industry, you have a lot of really cool things. DeFi projects, crypto-to-crypto trading, there's all sorts of innovation. And so for us at Tagomi, we're super excited about the other side of the fence as well, but we want to kind of knock down the fence and build a bridge over to that. And so that's our focus, is this on-ramp. So then stepping back and saying, okay, how can these large institutions that have fiat, how do we get them into the ecosystem so they can do all kinds of cool stuff with their Ethereum or with Bitcoin or with whoever you think will replace Ethereum? How do we get them across that bridge? And for us, I think that bridge needs more market structure. And so you have exchanges right now that are also acting as custodians, that are also doing settlement and clearing, that are also having an OTC desk. And so the idea is, with Tagomi, how can we kind of eliminate some of the conflicts that are created within OTCs or, within an exchange, and how can we sort of be the agent provider? And so prime brokerage for us starts with best execution and having everything in the same place. So best execution means routing to, without any bias, whichever exchanges we plug into, whichever other liquidity sources, and always showing the client at the end of the trade, this is exactly where we routed to, this is how much you paid on every order, and having no bias for any certain exchange or any certain OTC or any balance sheet. It's just 100% be aligned there and be 100% transparent. And so that's the starting block. That's the foundation for us, for a brokerage, is trust. And it's being fully aligned. I think from best execution and having integrated custody, the next set of things that our clients are asking for that we're working on initial programs around is, can we help find you the best lender, for example, for your Bitcoin? If you wanted to short, can we match you up with people who might be lending it out? If you wanted margin to trade, or if you wanted to post-trade settle, okay, are there folks that we've integrated with on the platform from a liquidity standpoint that would allow you to do that? So I think people, and especially institutions, are looking for a really unbiased, unconflicted guide that's going to take the position of brokerage, which in our mind really means the layer on top of all the different pieces. So the different pieces are incredibly important, and we wouldn't be here today in this industry without them. But at the same time, I think there's a need for a layer on top that can really help stack those together, and it starts to look like, at least for the on-ramp piece, a little bit more like traditional equities and other markets where it's more electronic, it's more agency, you have the breakout of brokerages versus exchanges versus OTC versus market maker, and these categories have recreated themselves in every industry where you're basically trading and fiat is involved. And so building that out to allow for those inflows into the very cool sort of decentralized world is what we think is a really, really important mission.
I love your use of the phrase "knock down the fence." I mean, that's one of the most intriguing parts of the market that we're working in, is the traditional side and the crypto side starting to slowly meet in the middle and each influencing each other. Going back to actually, before I go into more questions about prime brokerage, you mentioned DeFi for institutions. Is that something they're interested in?
I think people are. I don't think they're using it right now, but I think it has to be, a really important part of the story. Like, if we're building a bridge, obviously, to this class, but there has to be use cases for people to want to cross over and use that bridge. And I think a lot of what smart contracts and DeFi are doing are really interesting and really powerful as well, being able to create all kinds of customized contracts, being able to, wrap things and lend them. The idea of being able to stake. There's all these parts of the crypto world that's just really, really important, and it's important not to forget that's the whole reason we're building this bridge over to that side of it. And so I think you'll be able to do a lot with DeFi. It'll just be a question of how much work do you want to put in, because a lot of times you have to connect all the different pieces of the decentralized world, and there absolutely are people who can do that. Our COO, who was, working at Citadel but was mining Ethereum in his basement at the same time, sets up all this cool stuff on, basically almost replicates Tagomi, but in a DeFi land using all these different pieces. And there will be people who want to do that, and there'll be a ton of value. I think for us, just staying hyper-focused on letting you get into that world and get, the digital assets you want to engage in that world in a most transparent way and a way folks are familiar with is kind of our objective, but it's only a small piece of the entire ecosystem.
Not to mention the one that has the most potential to affect capital markets, the knocking down the fence that you mentioned before. But do you see institutions trusting algorithms, whereas at the moment they trust intermediaries?
I think eventually, yes, for certain use cases. So I think it just really depends. I think there will be DeFi applications that institutions engage with. I think maybe they'll, buy Ethereum on Tagomi and then, engage and work in the decentralized world. That's probably not next year. It's probably not in 10 years, but 20 years from now, as this technology scales, I think people will be interacting with it. And it'll be always a choice also. So I think being able to choose, okay, do you want someone to really help you along the way, or can you go set things up yourself? And that will become easier. Will always be sort of a choice out there. But we're very hyper-focused on today. Like, we kind of left our jobs to build Tagomi because we were spending a ton of nights and weekends helping LPs or friends or funds that had followed into investments we made, access this space in a way that they got better pricing. It was more transparent. It worked with their compliance office. And it just seemed like such a repetible need. So I think building this foundation of trust with clients and being able to stitch all of this together and help them navigate a really new industry and knock down the fence to get into it is probably one of the largest needs today. And we're excited to kind of build on top of that. So connect to decentralized exchanges, integrate things like staking and baking and all those other things as our partners do that as well. And so it's just a really fun world to be in because on the one hand, we'll hear a story from Greg, who, ran Goldman's electronic trading desk for 13 years, explaining how, this is going to shift from X to Y. And then, on the other hand, we'll see all kinds of new problems that nobody's seen before, and requests from clients who are, really cutting edge and some of the earliest adopters, wanting to do like really neat things. And so it's just like it never ends, sort of the requests from both sides of the market. And so for us, it's really like, how do you put a platform that can answer both constituencies' needs? And I think that won't necessarily come from a traditional sort of platform that might not be so closely related to the crypto constituency and what's going on in technology space. But we also don't think it will be, purely a startup that hasn't seen this before and these markets play out and understands, all of the things that large institutions want. And so for us, we constantly mix and match. Even if you just look at our org structure of, 16 people, 8 are from Two Sigma, Citadel, KCG, or Goldman, and the other 8 are not, and normally have, some sort of crypto background. And so trying to pull that together and create a platform that has the culture of both and can, respond to the needs and build the platform for both is really kind of our bet on the space.
And understanding the tech is essential, it's not enough by any means. You mentioned choice before. I imagine traditional world today, traders also have choice, but they choose between using traditional relationships or between using an algorithm. The difference is the algorithms that they tend to use today are centralized.
Yeah, so on the algorithm side, there are two parts to it. So one is, I would think of it really just as a tool. So stepping back in the broader market, algos can be used for both good or bad things. They can be used for good, for like creating more liquidity. They can be used for bad things like spoofing an order book. So,
parenthesis, how could an algorithm help create liquidity?
Yeah, so basically for us, for example, what we do is for larger trades, we route it across different exchanges. And so, the market ends up being a little bit more sort of calm in that sense. And then you also see players like market makers coming in, right? And they're creating a lot of liquidity. And if market makers could do it on margin, for example, they could create even more liquidity. And so the same sort of tech and tools can be used for creating more liquidity and having more fairer prices across exchanges. But of course, also people can kind of game the order books, and there's been all the negative press around things like that. And so the algos are really just tools. And so for us, like our most common algo that we use is really simple. It's just the TWAP, which says, wow, this is a really, really big trade. Let's break it up into small pieces and let's do it over time, and let's smart route it to wherever there's the best price, inclusive of fee, and let's make sure you never eat through the order book at one liquidity source.
It's done in nanoseconds or something, right?
Yeah, and so you don't want necessarily like an instant order placed like that. You can do it using the algos. But then we take that and we customize it for a lot of people. So they say, well, we want to take into account volumes, or we want to take into account the time period being like this, but not weekends. And so a lot of these are just tools that are helping people kind of get better pricing, but they're not necessarily better or worse than something else. Like, in other cases, you want to quickly move off a position, and, you're maybe even willing to pay a principal dealer to remove risk because you think it's a really volatile market. And in those volatile markets, there are higher spreads, and you want to engage with, folks trading on principal. So we think that there's a world for both agency, which obviously is very aligned, and we've talked about a lot of the benefits. But, we want to be fair also to people who are building products and doing principal trading, because there are times, too, when, you just want to off-put a position and you're willing to, pay somebody else for taking that risk on that position. So for Tagomi, it's really, we saw a missing piece of the space in the agency and in the electronic and in the smart routing and using algos and all these tools. And we know that's where the majority of the market is in most asset classes. But it's not to say that, there's also not room for OTCs or for principal trading. It's really about just giving the end users that choice. And I think Tagomi has kind of been a choice that's been missing for a long time that we thought should be out there.
To what extent are algorithms used today? How widely spread is the use?
Yeah, on our platform, many of the trade types are pretty standard, but I would also say, over 50 to 60% are using some sort of algo to place trades. And so we think that's certainly a helpful tool.
And are they affecting spreads?
So, spreads are really more a function of volatility. So, in very volatile markets, you see larger spreads. If you don't have more market makers there, you're going to see higher spreads. If the market makers aren't large and, being able to use leverage, you'll see higher spreads. So it's less, specific algos, and it's much more the components of the market. And so that's why in early markets, and obviously Greg or Kevin could speak better to this, but in earlier markets that are less mature, you generally see higher spreads. That's kind of a function of the maturity and the volatility. We've certainly seen spreads go down. I think that's more a factor of market makers entering the space. It's also a factor of just a lot more volume in general on, the better exchanges. And so we've seen spreads go down recently, and that makes a lot of sense in our mind.
To what extent does crypto data, market data, affect spreads?
Yeah, so that's been a hard one to get good data in the space, but there are a lot of companies that are addressing this. So many times, like when we hear, especially institutions say, this is missing, that's missing, they don't realize, it's a very new industry, and even in the last 2 years, there's so many projects working against all these specific questions. And so one question, of course, is, can we get data on real volumes? Can we get data on different assets? How do we get data to value them? So I would say, it's very fair to say that a big missing piece of the space has also been good, transparent data. We provide that on the trade piece. So when we place a trade, you'll see our post-trade reporting. You'll see how we did it, where we did it, what were the fees. And so to provide data on the post-trade. And before the trade as well, we provide data showing kind of what's the liquidity from the folks we connect with, how we think you should place this trade. And so we present data there too. But I think in general, there's a much bigger question around data in the space on the individual assets themselves. How do I think about valuing them? What data is out there for them? And then also just in terms of the markets as well. A lot of it's self-reported volumes or from other exchanges. And so you probably saw the folks at Bitwise and others have done reports on that, and it's been a constant question from regulators. But those are things that a lot of different folks are working on as well. And, we've started looking at integrating with, other data sources that can help educate our institutional investors and clients as they come on the platform to leverage some of those other data sources.
There are some good ones out there, as you mentioned, and you also mentioned the lack of services in the sector compared to others because it is so new. That also means or implies fragmentation. How are you seeing fragmentation in the sector evolving? Do you think it'll become more fragmented as more service solutions enter, or less so because there'll be some sort of consolidation?
Yeah, I think there will be some consolidation. So there are different buckets of where the consolidation will happen. So on the data side, yeah, it makes sense that, in the equity space, there are folks like Bloomberg that is a great product. I think, you'll see multiple products, but there probably will be consolidation on data. For us, what we look at much more is on the exchange side. And so, on the exchange side, there's also consolidation, but we're seeing that a little bit more geographically oriented. So rather than all these huge global exchanges roll up together, we're seeing in different countries, instead of maybe 10 exchanges, you'll have 3 or 4 market leaders in each. But because the at least centralized exchanges are regulated, there's very different nuances in each geography, and sometimes, honestly, kind of political influence as well. And then there's, of course, the go-to-market, being able to culturally speak to people and get them to onboard, and user acquisition is, very, very key for each exchange. And so the brand and the method of doing that, the distribution matters. So I think for us, the nuanced view is there will be consolidation with exchanges, but most of the consolidation will happen at a geography level rather than exchanges in one region, buying out and taking over exchanges in another. So we expect to still see that fragmented. Here in the U.S., I think there are 13 equity exchanges, and it's been an industry for a long time. So we expect to see multiple exchanges in different geographies especially, but also some consolidation there where exchanges that can't invest in the sort of infrastructure, matching engines, security, they're not going to be around all that long if they're small and player 8 or 9 in a certain geography. Doesn't make a lot of sense for consumers to probably go there.
And what about vertical consolidation? Do you see us entering into a phase where exchanges are buying data providers or custody solutions or lenders?
Yeah, I definitely think so. You have to kind of parse kind of talent acquisition from strategic acquisitions.
Okay.
So there's a real shortage, just in general, we feel this every day, of great engineers out there. But there's also a shortage of people who, have expertise or have known the space. And so I think a lot of acquisitions will happen just because people are competing for the best talent. And so, you'll see that. I think you'll also have, people who are trying to be more vertically integrated, and that's just out of client demand, because right now, if you don't have a DTCC, for example, well, you got to settle and clear somehow. And so, with Tagomi, we partner up with different banks, and, we help on that. The exchanges have to do it themselves. And so I think part of we have to have everything under one roof is just because, somebody's got to build it, and exchanges are in a good position in certain cases. But overall, we think that you will have specialists on different sides of the market that, have different alignments. And so I think that's also a trend we're seeing.
Speaking of fragmentation, one of the main advantages of a prime brokerage service is concentration of capital. Up until now, institutions even have had to maintain accounts at a wide range of exchanges, which ties up a lot of capital unnecessarily. Do you see that affecting liquidity either positively or negatively?
Yeah, that's a really good point. So, even funds that have been around for a long time, like Pantera is one of the first funds in the space. It's a client of ours. They've had relationships with different liquidity providers, done that setup, but you still have to, if it's not like the brokerage solution like Tagomi, you still have to split up your balance sheet across it as well. So even if you go through all the onboarding with each exchange and you negotiate and get a good fee across each and you have some volumes, you still have to then take your money in, because these exchanges are pre-funded. You have to decide, okay, this is how I'm going to split my money between these different exchanges. And if suddenly you see a good trade on, 2 exchanges, well, you're limited by the money you have on those exchanges. And so, with Tagomi instead, you're limited by the money you've deposited at Tagomi. And so even for funds that have been around, that have invested in infrastructure, they realize the value of a brokerage even if they have those direct connectivity. And so, for us, that's really powerful. And so what does that mean? It means a lot more people can enter the space and have kind of this full market access. And as you have more and more entrants into the space, market makers take note that, large institutional and retail investors are coming in, especially institutional, and they go and they provide liquidity on those assets. And so now suddenly you have higher volumes, you have more market makers, and, you have markets that look a lot more like the equities market. And so it's sort of all these different pieces have to come in. You need real use cases for institutional investors to come in. You need institutional investors, for them to come in, there has to be the right product set there and compliance. Once they're in, then you're really attracting the liquidity providers, the ones who can do it at a massive scale. And, you suddenly are recreating this world that we've seen recreated in equities, in FX, in credit, in asset after asset. And it will happen here. Bitcoin is only 10 years old. Any sort of larger, interest is only 2 years old. And this is kind of the first sort of market movement upwards where you actually have, many of the larger institutional funds set up or by proxy in the space through different crypto funds or index products. And so it's pretty exciting to see what will happen here.
And I imagine being tied into a few exchanges, because you can't have your money spread all over across the entire ecosystem, that would affect spreads.
Yeah, I think just in general, having more liquidity providers, more market makers, lower volatility, those are kind of the, we are always looking at this problem, and those are the highest correlations. It's really volatility to spread is the number one correlation. The number two would be something like, just generally the amount of liquidity, and do you have people providing that on both sides. Those are the really big things that affect spreads. I don't think Tagomi doesn't influence it as much.
Interesting. I'm actually like it. What about transaction costs?
Yeah. So, transaction costs in the equities world are quoted in fractions of a basis point. And here in the crypto world is quoted in tens of basis points. So something's got to change there in terms of transaction costs. Also, if you're placing a larger trade, it's really more about the hidden transaction costs, and that's eating through the order book. So that's placing a really big trade and eating through the order book.
And that comes down to spreads.
As well, yeah, and which again comes down to having more liquidity on these exchanges. And so for us, we are really hyper vigilant about keeping your costs as low as possible, because that's a real friction, and being transparent about it. So the first thing you can do is, instead of having one liquidity source, have multiple liquidity sources. That's really important to us, and we've been able to onboard, the best liquidity sources after doing really extensive diligence on them. And so one is just having more. Two is having access to it. So being able to trade across those different sources and not have to split up your balance sheet. 3 is to have access to it quickly. And so to be able to, really integrate with these providers, be hooked up to their APIs. And then 4 is to be able to, once you've facilitated this, settle it and mitigate counterparty risk. And then 5, in many cases, people choose to keep, cash and coin with us, and so making sure we have the right custodians and banks integrated as well. And so having that setup of those 5 steps is really important to minimizing, the costs that you incur. And obviously, as you get more scale, you have better rates across different exchanges. As you get more liquidity sources, you're routing to wherever best price truly is. And so this best price execution and having no dog in the fight there, as in, we don't trade off our own balance sheet, we don't discriminate against one exchange versus another, having no dog in the fight and really just striving to integrate with the best players and to have the best technology to quickly route to them, that's kind of the entire ethos behind Tagomi.
What will the role of stablecoins be in optimizing the use of capital?
Yeah, stablecoins are really interesting. For us personally, it's opening up a lot of new exchanges because, we can take your dollars, translate to stablecoins, and then go trade on new liquidity sources now. So we're very excited about stablecoins. We think that they'll play a big role in the ecosystem. There's a lot of debate around the different stablecoins and how you should do one. Should it be totally technical, like what Basis tried to do? Should it be just USD-backed? If it's USD-backed, should it be 100% reserved? Does it need to be a trust? What are other programmatic ways of creating stablecoins? And again, for Tagomi, we're a little bit agnostic on that stuff. We are super excited about all the projects out there, and we know that, as there are stablecoins with more adoption, for us what that means is it opens up, more markets, more exchanges, and it just lets us do better trades for our clients.
Do you see institutions discriminating between decentralized algorithmic stablecoins and decentralized fiat-backed ones?
Well, right now there are not as many decentralized algorithmic stablecoins, that have volume or that are working. I think
it ties into the DeFi conversation.
Yeah, but at the same time, I think that those projects are super, super important. A friend of mine, Renee, is working on one. There's some really great projects, and people are backing them in the space. And so, we would love to see that. Obviously, Maker has their own DAI, which is one as well that I think you can say in cases is working. But it's very early stage. So those projects, super excited about. Many of them are less than 2 years old again. But, they're building really real and cool technology, and the people are using some of them. And so, we would hope for that to scale. But where we're at today, in terms of just volumes, you obviously see that it's centralized stablecoins that are the more popular ones that are more used. But that might not be the case in 5 years. And so I think at Tagomi, it's really important for us. That's the whole idea behind having both sides of the house. And, we have people who are super excited and own all kinds of stablecoins and have been playing around with them. But at the same time, as a company, we're, at least for now, only integrating with a few of the centralized ones.
It's also fascinating how, to us, this seems very complex at the moment, always different instruments floating around looking for their use case. But probably 5 years from now, it'll be very, very simple. I
hope so, yeah. I think things become more obvious with time, for sure. Even Bitcoin is it's the only trajectory you can really give in the space that's older. And if you think about it, it was kind of started as more of a peer-to-peer payment with very small adoption. It kind of evolved more, I think, into store of value and people seeing that use case. That then got built up. You had the early custody players as well, and exchange platforms. And now it's being used in small pieces with Lightning and others for payment, but it's also still being used as a store of value. People are wrapping Bitcoin and Ethereum and then doing other things. And so it's sort of it's a long road to kind of figure out the use case for a lot of this. And I think that's the criticism that the industry gets. But I think that criticism is somewhat unfair because it takes a while and things look really silly, but then there's really fast inflection points, adoptions, and network effects, and you see that in almost any industry where there are a few iterations before it really takes off. And I think that the people and the investment in the space and where it's already taking off in cases like Bitcoin, I think should give institutions really second notice to get involved.
Yeah, and we identify the inflection points through the rear view mirror, through the windshield. One last question before we move over to audience questions. Leverage, do you see it as adding liquidity or adding risk?
Both, if that's not a cop-out answer. It definitely can add liquidity. If you give leverage to folks who are, market making and doing things like that, you're going to see tighter spreads, you're going to see more liquidity. Leverage always adds risk as well. One thing about Tagomi is it's for accredited investors. only. So we do not take any retail clients. The product set we are building out right now, we think should be for more sophisticated clients to use. And so, we're very excited about that. We think it will bring the space to the next level. We think that, multi-$100 million funds and institutional investors should absolutely have the ability to use leverage and, more complex products. And, we're excited to offer that to them.
Mark, thanks. You have an amazing, I love your turns of phrase, and also the fact that you can keep in your head the numbered points that you want to make. That's really impressive. Now I'm going to hand over to the questions from the audience. Here's a list of some of the ones they sent in. You get to choose which one you answer first. We'll probably have time to get to 2 or 3.
Okay, well, I'm happy for you to choose as well. I guess this is the shortest question, so I'll answer it. Will a Bitcoin ETF change everything? Not everything, but I think a Bitcoin ETF will do 2 things. Sort of one, it's a symbol of how far this space has come. Because to be able to go in front of the SEC and others and answer all of these questions around, volumes, trading, market structure, legal and regulatory, security, not security, to just get the ETF, I think will be a big win for the industry to say, hey, we've done all the pieces. And then in terms of change everything, it does open it up to much more retail. And then it'll open it up where you need authorized participants and all these other pieces of the equation will have to come into effect that will demand best price execution. So Tagomi is super excited about that one.
And also it would add sophistication and maturity to the underlying asset.
Absolutely. So not everything, but I think it'll be a sign of where we've come, and it will definitely push things forward in a big way. Let's see. There's a lot, obviously, here around regulatory. People have asked, is it helpful or is it kind of harmful? For almost half the questions are that. I think our view on regulatory is, to some degree, there need to be protections, but it would be really nice if they were standardized. And so right now, we definitely, we're operational in 20 states, and we have to go on a state-by-state basis and get MTLs. Tagomi has the BET license here in New York. At least when we go to other countries and we engage with regulators in the UK or Hong Kong, we've engaged in several places, you have a little bit less of this geographic sort of diversity in regulations. And I think that makes it hard for startups, to be honest, because you have to invest pretty heavily behind it. So we have 2 attorneys from the SEC, formerly at the SEC, who work with Tagomi full-time as our general counsel and our CCO. We were lucky to be able to make that investment because we've raised $28 million to date. But it is hard, I think, for startups that want to be able to navigate and be compliant to have to invest so much money behind that. And part of it is the fragmentation in regulation.
You're right. I think very few people realize how complicated regulated is. We just, get a license and you're sorted. It's not that simple.
Yeah, and then there's a lot here, how can crypto markets best avoid even the perception of manipulation? Is it through technology, best practices, regulation? I think the answer there is transparency. And so both on the data side, having a really clear sense of, having great data providers out there who can answer your questions around spoofing or any of the other pieces. Like you don't have those data providers currently, but a lot of people are working on that. And just having the clients expect that as well, to be honest. A lot of the LPs and the ultimate folks who are giving money into the space should set the expectation of best price execution and transparency and trade reporting and better data. And they should set the expectation of, what exchanges are you engaging with, how does your brokerage report. So I think all of that is really important. It's much more transparency than just pure regulation.
What advice would you give to an institution in choosing a data provider?
Yeah, I think, right now there are quite a few, happy to kind of go through some of them, but, there are really, I think, 4 or 5 different ones right now that are working on this. So it'll be really interesting to see. I think most of them are really solid. Let's see. Some questions around, we get this quite a bit, why build something centralized? I think right now there is the technology is more around, obviously, the centralized piece. And again, for us, focusing on the on-ramp is our focus. But, talking to people in the space who are passionate about once you're in sort of a decentralized ecosystem, I think, the people building that is even more important because, we're really just enabling a bridge over to that side.
And enabling the funding to enter the sector.
Right, exactly. Let's see. Are there, I guess, more regulatory questions? We should have got my GC double on here. He could have done the last. He can do all the question parts. Yeah, and then people are asking a little bit about payment methods. I think definitely, having crypto assets being used for payment will make a lot of sense as well, in kind of the utility token space too. So kind of a whole other topic. But for us, again, we're more token agnostic. So we're helping whichever use cases really evolve, helping folks on-ramp to those assets.
Speaking of that, derivatives, something we didn't touch.
Yeah.
What do you think about the evolution? What's your take on the evolution of crypto derivatives so far?
Yeah. It started also just a few years ago. You had companies like LedgerX and others, and then, you had the CME and on the future side. I think where we are today is what's exciting is there are players in the space that are doing it. So, folks like Bakkt and ErisX and others are coming out with products. There are folks like Batuta in New Jersey, which is helping people structure really creative derivatives for folks like miners. And so those sort of products, and they're very hands-on with their clients. And so it's a very, very early industry, but you have people like Batuta who came from, the traditional world, and then you have folks like Bakkt that are backed by obviously huge companies. And so it's just early. We don't have them on Tagomi yet, but again, as sort of the brokerage platform, as these markets evolve, we'll be able to link up to the exchanges and others, and kind of provide that for our clients as well.
Do you see any geographical differences in the treatment of derivatives from the institutions? In other words, do you see a greater interest in regulated derivatives from the U.S. and not so much from outside, or the other way around?
Yeah, I guess that's fair, but I think that a lot of people are even hesitant on derivatives. I mean, right now, though, there's a huge derivative market. I mean, obviously, BitMEX is where I think almost all price discovery is happening in the space. So, BitMEX is a huge business, very profitable, many users, has a huge impact on pricing of the market. And so, they've certainly pushed it to the forefront, and there's an active derivatives market. I think probably there are definitely folks in the U.S. that are looking for kind of a counterparty and more regulated solution. And then there'll be all sorts of variations between the CME and between BitMEX. There's probably a lot of room for, different variations. There's a company, CoinFlex, that recently, I think, launched out of Hong Kong, that has a pretty cool take on it. So it's just a super exciting space to be working at Tagomi and kind of getting to see all of these different players. And then for us, our expertise is so that you don't have to, we kind of pick and integrate with the ones we think are running the right way, that are responding to what clients need. And so I definitely think that this is an existing market, but one that will evolve quite a bit over the next 5 years.
I imagine the greater variety in derivatives that we're seeing emerge will, I guess, be an incentive for more institutions to come into the sector, which will impact liquidity, et cetera, the whole chain reaction. And what does that say, the variety of derivatives coming to the sector, what does it say about maturity?
Yeah, I definitely think it's an example of the markets becoming more mature. Large professional miners want to be able to hedge. You have funds that are taking the viewpoint that they want to short, different assets, and so you get better price discovery that way. So it's definitely just a whole part of growing up. And I think, every time there's criticism about where the industry is, or is it sophisticated enough, just look at the progress in the last 2 years. And in the last 2 years, equities haven't really changed much, or even maybe 5 or 6 years. But this market is moving really quickly. And so we think as a startup, nimble, fast, but with people from both sides of the aisle, we can kind of quickly move with it.
And the greater the variety of institutions coming into the sector, the greater the variety of their needs, therefore the greater variety of derivatives that will emerge to satisfy those needs, therefore the greater variety of institutions coming into the sector, et cetera. And one last question here. Regulatory certainty. Will institution investors need regulatory certainty before significant investments are made? I'm going to twist that question around a bit. What does regulatory certainty look like?
Yeah, in some cases I feel like we have that. So when a lot of institutions aren't moving into the space, I think partially it's looking at the use cases. When are we going to see smart contracts at scale that people are using? And I feel like the regulatory thing is sometimes a bit of a cop-out, because if you want to buy Bitcoin, you can do that pretty safely here in the U.S., knowing that it's not a security. So at least for Bitcoin. Obviously, every other asset, you have to go kind of asset by asset. That's way more of a conversation for our general counsel and our compliance team. But if you want to be able to buy Bitcoin, I don't think it's really the regulatory part that's holding folks back at this point. And it's important to note that I think the U.S. government is one of the largest holders of Bitcoin from, seized assets and all kinds of stuff like that. And, someone's got to buy and sell for them. And then even like in certain states, you can pay your taxes in Bitcoin. This is not something that either people are going to knock on your door and come get you at night if different states are accepting it for taxes and if the U.S. government holds it. And so I think, especially with Bitcoin, the challenges are much more around thinking through the custody, the trade execution, the settlement piece, and all of those infrastructure parts, but then just even stepping back and convincing people about it. Because I think everyone in the crypto ecosystem is in a little bit of a bubble, because I do feel like so many people just don't accept the use case or don't understand what Bitcoin is useful for. It's
what's it backed by? Right?
What's it backed by? Anything could be made out of thin air and be said, hey, it's a store of value. But those people are not understanding the technology behind it, the governance behind it, the network effects of it, the mystical story of the last 10 years. Like, all of these intricate pieces are very hard to put together. And I think Bitcoin has got to a place where it's sort of proven product market fit. And now it's, at least in usage, can't really comment on price, but in terms of usage, like, it's going to hit escape velocity. It has been. And what Tagomi is doing is a lot of retail, especially techie and libertarian, have participated in it to date. But, how can we have more people participate and more institutions participate, including huge nonprofits like endowments and pension funds, in the upside of this and get involved? And I think that the vast, vast majority still don't understand the use case or why it exists. And that's what's holding back more massive adoption of Bitcoin, not necessarily the fact that people think it's illegal to own.
We actually have many government representatives speaking at Consensus next week, and
nice.
I'm sure many more attending. So they are understanding the sector, and they are actively contributing, even though we do occasionally get confusing comments from FinCEN, as we have had recently. One final question before we wrap up: the bear market. What's your gauge of the sentiment at the moment?
Oh, yeah. So my cop-out answer is obviously on Tagomi, you can buy or you can sell. So whatever you view the market as,
that is a cop-out answer.
Please, come chat with us. But yeah, I feel like there's definitely, it feels like spring, but I also only seem to hang out with people who have bought into crypto nowadays, and so I have a very biased viewpoint.
We're cheerful.
For sure.
Anyway, Mark, thank you so much for sharing all of that with us today and for being here. And thank all of you for listening. Really appreciate it. This webinar, as I mentioned, will be recorded and uploaded to our web, hopefully sometime next week. But those of you who have doubts, you probably know that we have a lot going on next week, so I can't promise when. Thank you all very much, and I'll see you next time. Bye.